Good morning, and welcome back to the Daily Hunt for Multibaggers. I hope you're all having a fantastic Sunday. We're here to break down the latest AI-generated insights from yesterday's market commentary.
That's right, Ethan. We sifted through a fascinating, albeit somewhat concerning batch of social media discussions. While not a massive volume of posts, two specific stocks generated a good amount of buzz. Overall, the sentiment we picked up was a bit of a mixed bag. Some high-flying optimism clashing with some pretty serious underlying risks, making it a generally cautious market commentary today.
Absolutely, Brooke. Let's dive right into our first potential candidate, Quantum Computing Inc., or QUBT. Now, this one's been popping up, and there's definitely a buzz around the quantum computing sector, There's even some talk about potential U.S. government interest, which can really fuel these stocks. And in some discussions, users are suggesting that despite fundamental concerns, it might still see short-term pumps due to hype.
Well, Ethan, while that sounds exciting, our AI-generated insights are flashing some serious red. The overwhelming sentiment around QUBT is deeply bearish, with users explicitly labeling it a fraud. When you look at the KPIs, it's pretty stark. We're talking about a revenue growth of negative 0.667, massive operating losses at a staggering negative 166%, and essentially zero net profit margin. The company's market capitalization is over $3.4 billion, which, to be frank, seems completely unhinged from its reported $61,000 in quarterly revenue. The discussions also highlight ongoing lawsuits alleging fraud regarding product readiness and relationships with NASA. The idea that potential government interest could save it, well, it doesn't fix a fundamentally broken business model that spends $167 for every dollar it makes.
Point taken, Brooke. Those numbers are certainly sobering. It's tough to ignore when a company is bleeding cash like that.
Indeed, and just to reiterate, our podcast previously rated QUBT as a stay away on October 6th. Given the continued abysmal financials and the detailed fraud allegations, our assessment hasn't changed.
All right, so for QUBT, despite any speculative buzz, the fundamentals just aren't there. We're classifying QUBT as a stay away, based on its severe financial weaknesses and legal risks.
Moving on, let's look at BUL, or Webull Corporation. This one is interesting because while many users are reporting significant losses, some are down 50% on their calls, there's also this powerful undercurrent of long-term optimism. People believe it's going to turn around, citing superior UI compared to competitors and ambitious expansion plans. There's a real hope for new all-time highs, with some even averaging down.
Yeah, you can really feel that resilient bullish sentiment from the community. And the data does show a positive revenue growth of 0.447, which supports the narrative of expansion and new market penetration. Users are hoping for a run-up into earnings coming up on November 13th, suggesting they see future catalysts for growth. It sounds like a company with loyal users and a clear growth trajectory.
While I appreciate the optimism, Ethan, the KPIs tell a more cautious story. Yes, revenue growth is positive, but the company is still unprofitable. We're looking at negative net profit and operating margins. More critically, its debt-to-equity ratio is an alarming 15.015. That's a huge amount of leverage, which adds significant financial risk, especially when the company isn't generating profits. And let's not forget the price-to-earnings ratio is a sky-high 76.73, despite current losses. This suggests the market is pricing in an enormous amount of future growth that just hasn't materialized yet, especially considering its current price is near its 52-week low after a massive previous surge.
You're right, Brooke. That debt-to-equity ratio is certainly a head-scratcher, especially with those negative margins. It really puts the expansion narrative into perspective when you consider the financial strain.
Exactly. Our podcast has consistently rated BUL as a stay away in our previous market commentaries, including October 9th, 14th, and 24th. And unfortunately, the current KPIs, especially the profitability and debt, don't indicate a turnaround.
So, despite the strong community conviction, the financial metrics paint a very high-risk picture for BUL. Our AI-generated insights lead us to classify BUL as a stay away due to its unprofitability and extremely high financial leverage, making it a very speculative play.
All right, let's round up today's market commentary. Investigate as buy. None. Investigate as cautious buy. None. Investigate as speculative gamble. Webull Corporation, BUL.
Section 4. Disclaimer and goodbye. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions.
We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in to the Daily Hunt for Multibaggers.
We'll catch you next time.